5 secrets your bank doesn't want you to know. Customers and bankers have a shared interest. Each of us relies on the other just as much. As much as we'd want to believe our banks have our best interests at heart, the truth is that they don't always act in our best interests. Many naive clients may be unaware of the banking secrets that aren't generally publicized. Hello everyone and welcome to another video on our channel. In today's video, we'll be looking at the 5 secrets your bank doesn't want you to know. Yeah, you heard it right. So let's start our video. Number 1. Banks want you to walk into their branches. There's more going on than meets the eye when you enter a branch and find a teller smiling at you. Tellers may give the impression that they're continuously putting pressure on customers to open different accounts. However, this is simply because their jobs rely on customers opening new accounts. They are salespeople and each one of them has a quota that they must meet. It's a win-win scenario for both of you and the people who buy from you. Tellers must also suggest a certain number of customers to the bankers working at their respective desks. The largest commissions for bankers come from customers with large deposit balances. If you want to avoid being upsold on accounts and products you don't need, it's best to do all your financial transactions online. Please call our customer care if you have any questions or issues. It is far easier to refuse anything over the phone than in person, even if they try to make a hard sale on you. Number 2. The more you swipe, the more they make. The bank makes money by charging retailer-specific fees, whether you use a debit or credit card while making purchases. Much promotional credit card offers to require you to spend a specific amount of money within a given time to be eligible for the reward. This is an incredible deal, but they are just looking out for themselves by offering it. The more time you spend rewarding yourself by making purchases with your credit card, the quicker the banks will receive their money back. After you've saved up $1,000, it's reasonable to anticipate that you won't be able to pay it all off in a single month, which will cause you to incur interest fees from the financial institutions you borrow from. Number 3. A closed checking account can come back to haunt you. The account will be closed when you decide to stop using a checking account. However, there's a possibility that this is not the case. Even though a client's checking account has been closed, the consumer was still charged for their purchases since they had failed to change their auto-pay settings. Because of these fees and fines, some customers had to be turned over to collection agencies in certain circumstances. However, few banks have followed the examples set by Bank of America and changed their practices in response to the complaints of its customers. Number 4. There may be a way to avoid checking account fees. If you don't maintain a particular amount in your checking account each month, some big banks may charge you a monthly maintenance fee. When you get a direct deposit from a company or the government, the funds are sent to your bank account over an electronic network known as the Automated Clearinghouse, or ACH. PPD is an abbreviation that certain banks use to refer to these payments and other bank transfers, pre-arranged payments, and deposits. Whenever you see PPD next to your deposit on your bank statements, you can use a different account, such as PayPal or an online savings account, to make a deposit instead of using the listed account. If this is the case, your monthly fee will not be assessed, provided that you fulfill the requirements for direct deposit. Chase is one institution that enables customers to do this kind of transaction. Number 5. The Universal Default Clause. This law applies to credit cards that banks issue. If the bank determines that you have been late making payments on any of your open credit accounts, they have the authority to raise your interest rate or even withdraw your credit card entirely. Banks are permitted to verify all your open credit accounts. Under the Card Act, which was supposed to eliminate this universal default situation in 2010, there's still a 60-day grace period before interest rates on existing balances may be raised. This was originally slated to happen in 2010. Avoid getting a credit card issued by a bank with this restriction if you value your safety. However, the Capital One Venture One Rewards credit card is not one of those. Make sure you get all of your questions answered before you go out and purchase a card. Do your homework before opening a new bank account or closing an existing one. And if you want to avoid this problem, ask the financial institution what closing your account means. Well, that's all for today's video. Tell us in the comment section what you thought of this one. I really hope that you found this video interesting. If you want to see more videos like this, please consider subscribing for more. And don't forget to provide us with your valuable feedback. We'll see you in the following video with some more notable celebrities, facts, and stories. And until then, stay tuned.